Hello, 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 hello. Welcome to Al Stock Trades. How's everybody doing today? Yes, force to be reckoned with. Let's go, B-Rad Cooley. How's everybody doing? Yes, smash that like button, toy pushing back. Yeah, we got that $18 million share buyback. How you doing, Smiles? What's going on, B-Rad? What's going on? What's going on? What's going on? It's time to get blown away. All right, so this is going to be a short video. I just wanted to go ahead and just kind of update folks. There's a lot of things to talk about. If you guys don't know, Andrew Toy and Vivek made a post today. We'll explain kind of what they mean. Here's Andrew Toy's post, and then Vivek's kind of here, and I'll explain. So altogether today, Clover Health has held somewhat decently, given the market's onslaught with NVIDIA, about 4.36% down, but still up. And obviously year to date up 47%. So obviously just minor pullback here. Not really too worried. Obviously this is not a fundamental full pullback, more so it has to deal with the whole DeepSeek AI, right? So yes. So big update. We updated the platform, and this platform now is literally on a whole different level. Now your guys are starting to see the Bloomberg-like effect that we have. So very quickly you can start to see from this angle here that the platform has been updated to a point of where it's completely different. I'm going to explain kind of how this works. Now, again, unfortunately, we get a lot of critics, for good or bad. It's, it is what it is. There's a story of a wise man with his son. The son went to one village. They criticized him for, riding his horse in the village when, he should basically give his horse to rest. Then he, got off of the horse, and then another village said, "Why are you basically having a horse and wasting the horse's time?" So then, he realized at the end you can't really make anyone happy. So we've gotten a lot of critics that pretty much basically have said, why don't you talk about Pfizer, right? I'm just kidding, right? No, they said, oh, Al Stock Trades platform is just, regurgitated data, and there's not really a lot, that Al Stock Trades offers, and I just think that's a bunch of baloney. So you be the judge of the news here, given what I'm about to show you is going to be pretty intense. Very quickly though, given that we updated something which has drastically changed the overall fundamentals of how we do intrinsic value. No, actually, Smiles, I did this all on my own. I actually only slept 1 hour. 1 hour. That's all I slept, right? So I actually haven't been, I'm actually going to end this live a lot sooner. So I'm going to kind of show you guys really quickly though. We did extend the bundle offer. You guys have one more day. It's $500 off for lifetime access. Lifetime access to all of this, right? Lifetime access to this. Lifetime access to this. Lifetime access to the 2.5 billion outputs of institutionally graded data. Or you could go ahead and go pay monthly on other on just one other softwares that we offer and not include everything else we offer. So again, you be the judge. The point is we're trying to create a really large community of smart like-minded investors. And, so we went ahead. We got a lot of folks have just said, please, Al, can you just extend it? Can you please goddamn extend it? Right. And I'm like, okay, I'm sorry, use guy's name, name. Oh, it's fine. We'll go ahead and extend it. It's going to be tomorrow. That's it. $500 off flash sale. It's called flash for a reason. I get it because we made this. You guys want an extension. That's okay. That's understandable. Now, let me go ahead and explain to you kind of how this works, because man's a surgeon, soon to be, fingers crossed, March, baby. Okay. And then, and becoming a software developer, right? Seriously, right? Salute. Okay. So here's the thing. This is a very sophisticated, smart intrinsic value calculation. Okay. So I'm going to basically show you a couple things right now. Okay. Now, you know how Clover Health has been free cash flow positive on a quarterly basis? The only problem is that on a fiscal year basis, meaning that, we still haven't finished 2024. I know we're in 2025, but the quarterly basis for 2024 hasn't been finished. We have Q1 and Q2 and Q3 of 2024, but we don't have Q4 of 2024. That's the next earnings. So unfortunately, when people look up in people's Bloomberg terminals, they're only going to basically see that Clover's still free cash flow negative, right? Because all they're going to see is 2023's number, because that's the only year that's been completed. We still have one more quarter, which is Q4 of 2024. So this is a very smart intrinsic value calculation, because if it senses that the company is negative free cash flow, it'll automatically take 5% of the estimated 5-year revenue, not the current revenue, the estimated, right? And then it goes ahead and it basically updates it automatically. And then the growth rate we're going to talk about is to be left up for discussion, and I'll explain to you how this gets calculated. And the shares outstanding gets automatically pulled. So let me explain to you. So let's go ahead and let's put CLOV. Again, this is all part of the Al Stock Trades platform. You go ahead and hit enter, and you see autofill, and it goes ahead and graphs the data for you. Okay. So you can see how powerful the software is, right? And you can see now the average free cash flow is 81.18, which is essentially 5% of the revenue. Now, you might ask, Al, why are we doing 5%? I just told you, right? Because if you go ahead and look at 2023 and look at the overall free cash flow, and again, you see how it automatically pulls the free cash flow for Clover? It does all that automatically. And it goes ahead and graphs it for you here too. And you can you can basically mess with it here, right? But you can ultimately see here, ladies and gentlemen, that the free cash flow is actually negative, right? For the fiscal year of 2023, right? But so it automatically goes in and it adjusts for you. Now, the only problem is the growth rate. The growth rate is 44.83%. That's incorrect, right? So what it does is it takes 2019 and then it goes to 2023 and it calculates the growth rate, which then happens to be around 44.83%. That's not correct. So to work around this, we created a metric analysis where we took the 5-year average revenue growth, the 3-year average revenue growth, and the year-over-year revenue growth, and we took the averages of those to get 17.21. So if we were to put 17.21 here, then obviously the intrinsic value will change. But we already know something interesting. We know that they're going to be growing 27% based off of that Twitter post regarding the lives under management of Clover, right? So all you have to do is just put 27 and you update the projection, and it goes ahead and calculates a bull, base, bear, and recession. But here's the problem. You might say, Al, this is $12.58. This seems a little low from what you were saying. Well, it always has to go to average free cash flow. Remember, I told you, if the system senses it's negative free cash flow, it'll automatically revert to 5% of the average 5-year revenue. Now, you may want to do the revenue of the current year, which is actually pretty good, and it gives you a more estimated higher being optimistic, but this is obviously pretty conservative because we know that they're actually more than 81.8 million. And to prove that, there's a little button here that you can click and it shows you quarterly. And automatically you hit quarterly and you say get data, and it fetches the data. And you can see something interesting here. Here's your first quarter of 2024, your second quarter of 2024, and your third quarter of 2024. And if you were to zoom in here, you could just see it. You could see how it's like negative, and then all of a sudden now it's positive 25 million, positive 44 million, and you have 58 million. Obviously, it's more than 118 million, but I'm just going to stick with 118 million to be conservative. So then you add these 3 quarters, and then you go ahead and you put 118 million, and then you go ahead and update the projection, and it goes ahead and calculates it for you to where you get basically a bull case of 18.28, a base case of $12.56, a bear case of $9.22, and a recession of 4.57. And it goes ahead and automatically calculates the rate of return you're going to get based off of the closing price of $4.61. But the problem here is this is the average free cash flow of Q1, Q2, and Q3. Like we did, 118 million divided by 3 gives you 39.33 million. You go ahead and multiply that by 4, you get approximately 157.33 million. We could go ahead and basically do that to show you the updated intrinsic value calculation, and you can go ahead and see your bull case of $24.37. But since we haven't basically gotten Q4 yet, we could go ahead and pretty much update that to basically show this. Okay. Now, how did you build this? So we are not using Yahoo Finance API. So we have our, this is not, no, right? No, right? We are competing against Yahoo Finance API. So we have a wide variety so we actually are our own data source company where we basically get data, right? So, and we're able to essentially democratize that data, right? So this is all proprietary to our stock trades, right? Um, and you can see how impressive this is, right? And again, I haven't had time to essentially be able to get this is something that this was something to be rolled out from a long time ago. And in fact, we're going to be creating our own Bloomberg terminal, which is why I'm telling you that the lifetime access is going to be 5, 8, 9, 10, 15, $20,000 for lifetime access in the future. It's going to continuously increase. So you can basically see for yourself the value that you're getting. And this is just one thing that we just released, right? And you can basically see all this. You can see it's positive free cash flow on the quarterly. So you can see how powerful this data is, and it's very fast. There's no lag. Okay. Really, really cool. But where is it pulling on the finances? So again, keep it cheap for when I can afford it out. No, yeah, again, this is very, we try our best, but ultimately, this is very expensive, right? So that's pretty much it there, right? And you could see essentially how powerful this is, right? Right. Most of the Bloomberg's value is in bonds, right? So I would, yeah, I don't know about that, right? We are doing so good, absolutely, right? And the thing is, most of the stock returns actually are in stocks in terms of the highest rate of percentage returns. Bond market is quite large, but the stock market shows the highest returns. And I believe that's chapter 1 or 2 of The Intelligent Investor. Love it. Looks awesome. You're doing all this alone. Yep. All alone, baby. I haven't slept, right? So you can see the power of this. And you can see that so now let's go ahead and let's put in Tesla. Actually, let's go and put Tesla. We put Tesla, and then we automatically get the data, and it goes ahead and regraphs it, and you get a bull case of $238.37, right? But here's the thing, okay? We have 380, so we have $3,812 billion. Sorry, $3,812 million of free cash flow, which is equivalent to $3.8 billion. Now, if we were to go ahead and take a look at the annual and then get the data there, then you can basically see that in 2023 you got a free cash flow of pretty much 4.3 billion, and you got 7.5 billion. So we essentially take the average free cash flow to make it a little bit more safer. But then if you want to look at the quarterly for Tesla, it's interesting because you look at it here, and you could see that the first quarter for Tesla, it was actually negative free cash flow, right? And then all of a sudden it recovered. So could this negative free cash flow be a one-timer, or is this historically just a bad quarter, right? So I don't know, right? If we were to negate that and say, you know what, we're going to go ahead and omit that, we can go ahead and recalculate it and say, I'm just going to put the highest free cash flow, and I'm going to, take these two, right? So we could go ahead and take this. 7,552, 4,357. And the beautiful part is there's a little button here. You could do screenshots. You can screenshot this and share it, right? But there's a little button here, and you have like essentially a smart calculator. So you could go ahead and for Clover you could say 1350 M for million, and you could say at 5%. And then it can go ahead and run it automatically for you here. But again, it does it automatically. So there's honestly no point of doing that, right? But you can go ahead and type the calculation here, and then go ahead and add these together. It's a smart calculator, right? You get this and divide it by 2. Oh, I'm doing this wrong, aren't I? Hold on. There it is. Divide by 2. Yeah, I'm doing this all wrong, guys. I'm sorry. Hold on. Lack of sleep here. So 755. So 7,552, 4,357. Yeah. So let me go back up to the calculator. Sorry, guys. Just lack of sleep. All right. We'll call it that, right? All right. So let's go ahead and let's put this here. So 7552 plus, 4357. You can see it needs some finessing, right? Divide that by 2, you get around 5954, right? So you could close this and you put in 5954. You could go ahead and say update projections, and then you can ultimately go ahead and you can see, you got a bull case of 372. Now, obviously, there's robo taxis, there's all these other things. You can increase the growth rate. The thing is, the growth rate now for Tesla is, 5 years, 35%, 3 years is 45%, and then decreased. So, can it go back to that 40 to 45%? I don't know. But ultimately, the stock price is right here. You see how all the data is right in front of your face? This is a very powerful way of doing intrinsic value where you have the finger on the pulse, right? So $397.15, so you could see kind of next to that bull case, and then it's up to you regarding what assumptions you want. For Palantir, you can go and put Palantir, gets the data, fills it in, and then it goes ahead and graphs you Palantir. Now for Palantir is actually quite interesting because you would have to, it's showing you a lower free cash flow, right? Because it goes ahead and it takes the average free cash flow from the past 5 years, and you can see they're a negative free cash flow. This is another one with like Clover, but the problem is the reason why it doesn't do 5% of revenue, because it takes the average here. In fact, I want to say, yeah, it takes the average here, and even if it did 5%, it's still not good enough, right? Because this is a SaaS company. So all you got to do is you got to hit quarterly, move it here, get the data for quarterly, and you could see for the past, this is 2024. You just got to go ahead and and add these numbers, right? And you could just do trailing 12 months. So you could just honestly, you could just go ahead, and what I like to do is just kind of, take a little screenshot here and just, or you just have a calculator on the side. You could go ahead and add the free cash flow real quick and say, 296.31 plus 126.92 plus 141.31 plus, 415.79. Oops, hello. And you can go ahead and hit enter and then divide that. Oh, no. I'm sorry. You just hit enter and you get a free cash flow of 980 million. And what we basically did is we took the trailing 12 months, right? So we took the free cash flow here, and here, and we added it. And we essentially got 980. And there's memory in it too, right? So you do 980, right? 980. And we go ahead and essentially run this projection. It already put in the shares outstanding. And you can see a bull case of $45, right? So this is kind of where it's at right now. And you can see how Palantir is actually trading at a premium, right? So what folks are wanting is that, they're saying that, Palantir could grow 45%. Now, if you grow Palantir as 45%, then you could see 113, or let's say, you do 40%. You could kind of continue changing these projections to basically meet your needs. You can see how powerful this is, okay? So then now let's go ahead and let's basically switch to this, okay? So now let's go ahead and take a look at Clover. So we go ahead, we type in Clover, and we go ahead and graph the data for Clover. And this is very powerful. So we could go ahead now and we can look at the minute chart, right? And I still need to do some programming and coding for this because I still want to add a couple things. But this is really cool because you could go ahead and type support and resistance. And automatically it graphs you support and resistance. It's all part of the Stock Trades platform, okay? And you could basically see that you have a support here at $4.56, which obviously was respected, right? The next level of resistance is 466 and 480 on the minute chart, okay? We could go ahead and just reset this quickly. We're still on the minute chart. We could do a Fibonacci sequence retracement, and you could see, we got $4.51, $4.59, and $4.69, right? We could go ahead and reset that, continue with the minute, but this time do a Monte Carlo sequence simulation. So you can see the Monte Carlo here. And the difference between this Monte Carlo and many other Monte Carlos is that this basically graphs, it shows you 20, but what it does is it graphs actually 1,000 simulations. 1,000 simulations. And the powerful thing is it doesn't use your computer engine. It uses our neural engine that we have to essentially graph the 1,000 Monte Carlo sequence projections. So the Monte Carlo from the minute chart is showing Clover to be $4.62. Let's upgrade it to the hour chart. You put the hour chart for Clover, you do a Monte Carlo sequence projection, and then now you see this, you see how sexy that looks, right? Again, all part of the Al Stock Trades platform. Again, 1,000 simulations, and you essentially get $4.73. You can run it again, and you change the number, $4.75. Run it again, you get $4.76. The point here is that you can see it's hovering right around that, which is why we have a high number of N for the simulations, so then we can basically graph a linear analysis. Let's go ahead and reset this. Let's go ahead now and graph the daily. We graph the daily, and now let's do a Monte Carlo. We go ahead and do a Monte Carlo now, and you can see now it's starting. You can really see it, right? If we run 1,000 simulations, you basically, and take the linear progression analysis, the most likely outcome is $6.76. You see how powerful this is? And then you could go ahead, and then you can, reset, and you could go ahead and, let's say, graph the weekly. You graph the weekly, you hit the Monte Carlo, and it goes ahead and graphs this, and you can see the Monte Carlo with 1,000 simulations is $39. $39. Clover Health, $39. Okay. So you can basically see how powerful this data is given how Clover has been rising, right? And you can see ultimately these different types of simulations that we have, 400, 45, 69, and approximately it's $39. Okay. Then you could go ahead and do the all-time graph, and this graphs you the whole thing, and you could do a Monte Carlo, and then you get approximately $4.49, right? We could go ahead and essentially now reset this, and then again, for the weekly, daily, hour, I'm not going to do it for all of them, but you could do a support and resistance line, which then basically graphs you this, and you can see how, this is your 783, right? Or you can reset it and then graph a Fibonacci sequence retracement, right? So you can see how powerful this data is, and you can do it with any other stock you want. All right. So now we went ahead and played with this. And again, you can look at any stock you want. I mean, here, let's take a look at Palantir real quick, right? Lowercase, uppercase, doesn't matter. It graphs it for you. We go ahead and do a Monte Carlo. We got $122 for Palantir. Let's go ahead and do the minute. Actually, let's go and do the weekly. And let's do a Monte Carlo. A Monte Carlo on the weekly for Palantir, $536. Again, we are providing a powerful software that people do not have. Oh, okay. Let's go ahead and, just for kicks and giggles, let's go ahead and do NVIDIA, right? Here's NVIDIA, right? So let's go ahead and look at the hour. And NVIDIA, you can see it just basically dropped. You see that big drop, right? Drop it like it's hot. Let's go ahead and have some fun. Again, there's a couple things I want to basically do with this here. There's a couple more calculations and a couple more things I want to get done. But it's looking pretty good here, right? So let's go ahead and do a Monte Carlo. You run a Monte Carlo for NVIDIA, you get $118.79, right? We go ahead and reset it. And let's go ahead now and open up the weekly. Actually, no. I'm sorry. Open up the hourly. Or should it be the daily? Right? It's not a... Let me see here. So there it is. So there's the drop. Let's do the support and resistance lines calculation. And you can see how it's heading near that 116. It broke through 129, 138. You can see it hit the 146 level of resistance. We can do a Fibonacci, and you can see how it hit right on that Fibonacci of 118.21, right? And I believe that may be the buying the dip opportunity, right? So you can see the power of the software. Now, again, there's a couple things I want to get done here that I would like, a couple things that I want to do in regards to the data. And this is obviously live. You can use this right now. But I want to, there's a couple things I want to get done with the data. And I'm probably going to do it tomorrow or after. Let me go ahead and look at the thing. Oh, I appreciate you. Wasn't the lifetime access? Oh, yeah, I know, exactly. And now lifetime access is going to be $500. It's going to be, it's going to be 3,000, 4,000, 5,000. 7,000, 8,000. It's going to continue going up, and it's probably going to go up higher than those increments, right? But you can see how people that got in early, and I'm telling you, this is early. If you think this is good, this is early from what we're building, right? So yeah, so there it is, right? Let's see here. Not available on monthly subscription. No. So unfortunately, this is not available on the monthly subscription. This is for lifetime access members. However, we do offer Affirm and also PayPal to turn it into a monthly, but you get it lifetime. So still, wonderful deal, right? How does the Monte Carlo differ for, let's say, Palantir? The IVC showed around 100, but then the Monte Carlo show. So you have to look at different time frames, right? And again, there's a lot of, cooked in data within the Monte Carlo that you get from past projections. And potentially there could be something, with space, something with another contract from the government, a lot of things. Now, one more thing I want to basically, and here it is, there it is, right? And again, I need to do a couple more things here to really clean this up and to really just make it just very powerful. I want this really strong, right? It's strong right now, but I want it strong. All right. This here is the Al Stock Trade Sentiment Analysis, right? This is a really great tool, right? So let's go ahead and type in Clover. We automatically type in Clover. It fetches us the data, and it said it analyzed 66 articles. And then, you can look at the articles here below, right? And you could see this is the, sentiment score, right? And you see how beautiful the graphics are, right? This is a sentiment score. So back in May, you remember that, I'm sorry to say this, the idiot who wrote the article that was bearish for Clover saying you should sell Clover. This was like, it was, people were very bearish on Clover. Again, a negative number means bullish. I'm sorry, a negative number means bearish. And the higher the negative intensity, the more bearish it is, right? And ultimately, the higher the number here indicates it's bullish. And in fact, if you hover over it, you see there's the word bearish, right? And if you hover over the top here, you can see bullish. So let's look at the stock price on May of 2024. So we can go ahead and do that, right? So let's go ahead and look at May. You look at CLOV here and look at, let's look at a year. You can see in May, Clover was 64 cents, right? 64 cents. Let me go ahead and push this to the top here, ladies and gentlemen. 64 cents was Clover, right? Around, actually, right here. Yeah. Right here at the beginning of May, it was 64 cents. And you could see how bearish people were, right? And again, like I said, you want to do opposite of, dumb money. And again, this basically analyzes articles, right? You can go ahead and do 5 years, and you can look at overall the bearishness, bullishness, bearishness, and bullishness, and you can see this. And there's about 927 articles analyzed. But I capped it at 1,000 because ultimately you want to know intermediately where the stock is going. And you can see most recently, like here was December. Here was November 6th. November 6th, a lot of bearish news came out about Clover. So November 6th, right? So let's look at here. November 6th was right here. You see how powerful this is? You see how powerful this data is? You have the power of data in your hands. So you could see on November 6th, we got extreme bearish news. So what happened to the stock price? It went ahead and fell 30%. And all of a sudden, it started to recover, right? It started to recover. And then here we have, January 24, and you could see January, we're very bullish. So you could see how this helps you put your finger on the pulse. In fact, what we can do is we could just go ahead and look at NVIDIA. You analyze NVIDIA, and it fetches the data for NVIDIA. And you could see NVIDIA, it was very bearish today, right? Very, very bearish. You can see it was very bearish. But now the articles are slowly starting to recover, right? It went from literally bearish to now going to neutral, right? So, you can look at the overall, plus 0.5 equals the bullish tilt, below 0.5 suggests the bearish tilt. And again, this is all data provided from Al Stock Trades. This is our own proprietary analysis, our own data, and you can basically see how we're basically shaping the user experience now to be like a Bloomberg terminal, but we're doing it in such a way that's lifetime access. So you can see that you're starting to get a bang for your own buck. And on top of this data, you can't forget about the other data that you have, which is part of the stock terminal, which is basically this data here. You have access to all this data here, which is essentially your algo flows and all these things, which is 2.5 billion outputs of institutionally graded data. And on top of that, you have a lineage of investors that are open sourced, meaning that you can essentially see the research that they're doing and ultimately ask them questions. So you can see the power of the overall community that we're building. We are trying to break out of the matrix, and I'm trying to show you essentially what I've done to go from zero to hero. Okay. So that's pretty much where we're at right now. For folks that are interested, take advantage. You won't regret it. Take a leap of faith. I can't wait to see you on there. Let me go ahead and take a look at the comment section real quick. My dad used to do Monte Carlo project management something like 30 years ago. Again, it's a wonderful, wonderful tool. Wonderful tool, right? I picked up a few, missed those days. I love you, Clove to retirement. So guys, so there it is. That's all I have for you guys. I'm going to go to sleep. Yeah, now go to sleep. I'm going to sleep, right? You know, homeless guys aren't usually this smart. Oh man, I can't even laugh. I'm so tired, guys. I'm sorry. I'm tired. What's up, Gunslinger? All right, guys, love you a lot. I'm gonna go sleep because I gotta wake up in 6 hours and go do it all over again. Right? All right, guys, love you all. See you in the next one. Peace.